Hello and welcome to Between the Lines, the podcast that dives deep into the stories reshaping Asia Pacific's reinsurance landscape. I'm Mithun Varkey, Editor-in-Chief. As always, we bring you a quick recap of the biggest stories of the past 2 weeks and a sneak peek into the stories we're working on. But first, our special guest this week, Raunak Mehta, co-founder and CEO of Singapore-based insurtech Igloo Insurance. I sat down with Raunak to discuss Igloo's value propositions, the company's growth and M&A plans, technology, and how AI is reshaping the business.
Remember, insurance is a very push-based industry. It's known for coming up with a very cookie-cutter approach to problem solving. It's known for being, in spite of it being in the financial services domain, there is no such thing as personalization, right? And I think that is where the ingestion of this billions of data points enables us to come up with products that are in a way catered to the needs of the target segments that we serve.
Today I'm joined by senior correspondent Aidan Gregory and reporter Joana Nguyen. Welcome both.
Thanks, Mithun.
Great, let's get into it. We've had some exclusives and standout stories in the past few days. First up, Aidan, you had a big scoop from Hong Kong. Tell us about it.
Yeah, so a nice people move to start. We broke the news that Carlos Grijalva is heading to Gallagher Re to head up its cyber business in Asia Pacific. Carlos is a very well-known name in the cyber market here in Hong Kong, and he was previously head of cyber sales for Asia at Willis. He's due to join Gallagher Re next month. That's
quite an interesting move for Carlos, who's moved from a primary insurance broker to a reinsurance broker, and especially Gallagher Re, which is primarily based in Singapore and not so much in Hong Kong. Is he going to continue in Hong Kong?
He is staying in Hong Kong. I think it's also a sign of Gallagher Re's ambitions in the cyber market, given Carlos' profile here in Hong Kong.
Great. In another people move scoop that we had, we reported that Kelvin Wu, who is QBE's head of corporate underwriting for Hong Kong and Macau, is set to leave the insurer and join Sompo in Hong Kong. We understand from the market that Wu will be joining in a distribution-focused regional role in Hong Kong, while Sompo did not confirm his appointment, did not comment on the story. But QBE did tell us that Wu would be leaving on May 10th, and also mentioned that Christelle Poe will sort of step in and assume the role of head of distribution for QBE Hong Kong and Macau, while the insurer finds a replacement for Wu. Wu's quite a big name in the market. He's been around for a very long time. Previously, he was at Generali as head of casualty underwriting for Asia. He spent over 15 years in Generali across 2 stints. And between that, he was at AIG in Hong Kong, again, where he had 2 separate stints. And also he's worked at AXA. So he's a fairly well-known name, both in Hong Kong and around the region. At Generali, he'd had roles he'd worked across Hong Kong, Vietnam, Thailand, and as well as in Italy for Generali. So it's quite an interesting move, and so it speaks to Sompo strategy in Hong Kong. They've been really ramping up since last year. They've done quite a few hires in the region, senior hires. So we'll continue to see some strong growth plans from Sompo in the region. Moving on from our exclusives, let's talk about NatCats. It's been a fairly benign quarter, except for a few events in Australia. Most of the region hasn't seen any big NatCats, thankfully. But there are a few interesting reports that have come out from the brokers, Gallagher Re and Aon, bring us the numbers and insights into the losses so far from the region. Joana, you've been across both the reports. Can you tell us what's the NatCat environment look like for the quarter?
You're right, Mithun. So while the human toll across the Asia-Pacific was significant, insured losses remained comparatively modest, below $1 billion US. Economic losses, meanwhile, stood at around $2 billion. The costliest event in the region was the bushfires in Victoria in January, which was estimated to have produced total economic losses over $1 billion US, with insured losses of roughly $300 million. Cyclone Narelle, which was also a severe event in the country, has led to about $500 million in economic losses.
Narelle was actually a pretty extraordinary event. It was only the third named storm in recorded history to make landfall in 3 different Australian states. You know, having originated in the Pacific, it crossed Queensland, and then it moved across the Northern Territory before coming down into Western Australia southwards. The last named storm to do this was Cyclone Ingrid in 2005. So it's pretty rare. You know, it was quite an extraordinary Nat Cat event in Australia.
Right, indeed, a very rare movement. And then closer to Asia, we have flooding in Afghanistan and Pakistan in late March and early April, which has also incurred one of the largest economic losses in the first quarter at around $400 million US.
That's right. I mean, that's for the first quarter. I think Aon's report also went into sort of an analysis of the 2025 events. What does Aon have to say about the 2025 NatCat experience?
So last year, the Asia-Pacific region was hit with about $76 billion US in economic losses, driven largely by the Myanmar earthquake, the flooding in China and South and Southeast Asia, and a series of high-impact cyclones. Only around 10%, or just over $7 billion of the losses were insured, highlighting the wide protection gap in the developing countries in Asia. For example, we have the 7.7 magnitude earthquake in Myanmar in March. It killed nearly 5,500 people, causing almost $16 billion US in economic losses, which is about 20% of the total economic losses in the region. However, its insured loss was only about like $1.6 billion US, or about 10% only.
Quite interesting numbers there, Joanna. I mean, the 7.7 magnitude earthquake in Myanmar last year was one of the biggest loss events last year. And that kind of sits in contrast to the 7.7 magnitude earthquake we saw in Japan last week, which turns out there weren't any, thankfully, any big losses or a loss of life after such a massive earthquake hit. However, I think the officials were warning for often potential mega quake after that event. Thankfully, it's been quiet on that front so far. In other news, Aidan, you had quite an interesting video interview with Pierre Vaughan, who's the life and health leader for Aon in APAC. You interviewed him about the prospects of the asset-intensive reinsurance market in the region. Tell us what's happening, Aidan.
So I had a good conversation with Pierre about the development of the asset-intensive reinsurance market in Asia Pacific. In the last 2 years, this market has emerged as a very vibrant and fast-growing corner of the reinsurance industry in the region. It's driven by a few things, mainly in a Japanese context, but it applies to other developed markets in the region too, like Hong Kong and Singapore, and Taiwan and South Korea. Basically, what's been going on is the Japanese life insurers have been grappling with this pretty dramatic upward move in interest rates in the last few years. Having had decades of low rates, and at the same time, Japan's also moved to this new solvency regime at the end of March, which makes their balance sheets much more sensitive to short-term movements in capital markets. So this is driving a big move by Japan's life insurers to free up capital from their balance sheets. And what they're essentially doing is they're reinsuring these large blocks of policies, which are likely from decades ago when the monetary policy environment was very different. And they're reinsuring these blocks of policies with offshore based reinsurers, many of whom are based in Bermuda. But essentially, these are quasi M&A transactions between life insurers based here in Asia and foreign reinsurers, based offshore in other jurisdictions. But it's been a really vibrant corner of the market, and we've seen numerous kind of multi-billion-dollar transactions out of Japan. Hong Kong's been a bit quieter, but there is quite a lot of activity going on, and Hong Kong's solvency regime, while it's not as strict as Japan's new regime, it still has many of the same characteristics. And the pipeline of liabilities that's available for reinsurance in Japan in particular is absolutely huge, given the country's aging population and just the size and maturity of Japan's life insurance market. So, while we have seen a lot of deal flow already, the sense among practitioners in this market, including Aon, is that this market's kind of only really just getting started, and we are likely to see it proliferate in the other mature life markets in the region where the insurers face similar market forces of higher interest rates and aging populations and strict capital rules.
I mean, certainly looks like there's quite a lot of capital coming into the market from private equity funds, and there's a lot of new vehicles being launched to assume some of these assets. So looks like we'll see more of these deals. It'll be interesting times. Up next, Joana, you recently spoke with Alliance Risk Transfer, the manager of the Hong Kong Marine War Risk Pool, which was launched late last year. We know that they've been providing capacity for vessels from Hong Kong and China, especially during the Middle East, since the outbreak of the Middle East conflict. Can you tell us about the Marine War Risk Pool in Hong Kong and what are the opportunities for Alliance Risk Transfer?
So I currently sat down with ART Executive Chairman and Head of Underwriting Charles Chow and Chief Executive Yan Zhuan. So ART is an MGA focusing on marine hull war insurance. So close to 90% of the pool clients are from China and Hong Kong. And then from a geopolitical perspective, ART said that Chinese and other Asian ship owners are in a better position than Western countries because they are not targeted by the Houthis in the Red Sea, Iran in the Persian Gulf, or Russian forces. So, ART's risk profile is different from the London market, whose client base is, worldwide. So they are more able to offer, lower priced solutions compared to the London market. And this is also demonstrated by the claims history of ART itself. So the MGA has only had 2 claims so far since its establishment in 2021, with the first one costing about $60,000 and the second one having a preliminary survey estimated at $1 million.
And so, I mean, what is ART's broader strategy for the pool?
So the pool was launched in November last year and is currently backed by 5 principals who are all local insurers in Hong Kong, namely China Taiping Hong Kong, PICC Hong Kong, CMB Winglong, China Pacific Hong Kong, and Asia Insurance. And ART said that as the principals become more confident in the profitability of the pool, they can invest further and increase their retention capacity, which in turn will encourage more local insurers to join. This will also make the pool to be, more localized and independent, supporting Hong Kong's goal to become an international maritime insurance center. And there is much more insights from ART in the written article, so I encourage our listeners to check it out.
Thanks, Joana. It's quite a few really interesting stories in the past couple of weeks. Now, looking forward, what are we all working on? Aidan, what's keeping you busy?
I have various things in the works at the moment. I've still been very busy with all the video interviews, and I recently sat down with Ron White, who is Miller's head of the Asia region, to talk about the specialist reinsurance brokers' plans for the region. They've been expanding quite fast in South Korea and Japan, and also in their main hub in the region in Singapore.
Great, I look forward to that story. Joana, what are you working on?
Yes, so one of my future stories is about AI-driven liability risks. So as organizations embed generative and non-generative AI into customer interactions, decision-making, and core processes, they may be unknowingly exposing themselves to a class of AI-native liabilities that traditional insurance may not fully recognize or respond to. So these liabilities can arise from the malfunctioning of AI, including, hallucinated statements, poor automated decisions, discriminatory model behaviors. So I'll be speaking to relevant underwriters and brokers about their viewpoint on this.
Thank you, Joanna. That's certainly an emerging risk. I've got quite an interesting story lined up this week. I am interviewing both Victor Cook and Franz Joseph Hahn. The background to it is that Franz, who founded Peak Re 12 years ago, is stepping down as the CEO was actually stepped down as the CEO of the Hong Kong reinsurer. And Victor Cook, who was formerly leading Swiss Re in Asia Pacific, has taken over as the CEO of Peak Re. So I'm doing an interview with both of them to talk about what it took to build Peak Re, and what Victor's plans are for the reinsurer. So it's sort of the passing of the baton, sort of the story. Really excited for that, for the interview, and really excited for the story. So look out for that story in the coming days. That's all from us this episode. It's been a fantastic conversation. Thank you both. Let's get back to work.
Thanks a lot, Mithun and Aidan.
Our guest for this episode is Raunak Mehta, co-founder and CEO of Igloo Insurance, a Singaporean insurtech that focuses on providing technology and infrastructure to insurance companies, as well as help with distributing the products across Southeast Asia. Raunak talks about Igloo's value proposition, the company's growth plans around the region, its acquisition plans, as well as how technology and AI is reshaping the insurance value chain. Today we're joined by Raunak Mehta, co-founder and CEO of Igloo, one of Southeast Asia's leading insurtech firms. To start us off, could you sort of tell us a little bit about yourself and share the story behind founding Igloo?
Yeah, so I'm Raunak. I'm the co-founder and CEO of Igloo. I've been at this for a good 8 years now. I have had some background in the startup space, starting with Flipkart more than 15 years back. And from there on, I moved to Zalora. So I've always been part of the startup ecosystem, as you could say, on the consumer internet side of things. And after having experienced firsthand the power of technology and how it, in a way, uses network effect to visibly change entire ecosystems, business models, that's where I thought that the next stage of I would say, exponential change was probably going to be in the financial services sector. And I'm talking about 2017-18, when the world was waking up to what blockchain/crypto could be. There was heavy investments, as you can imagine, in Southeast Asia, in the primitive space. And by primitives, I mean the first layer of e-commerce and e-wallets. And given the massive unbanked, underbanked, uninsured, underinsured population in here, that's where I wanted to move into, right? And we all know insurance has always been a laggard when you compare it to other, as I call them, macro KPIs, be it GDP growth, be it inflation. Insurance tends to, in a way, always be the, you could say, the son or the brother that doesn't perform up to its potential. So I took that up as a challenge. And I took that up as a challenge because I believed with a lot of conviction that by the right usage of technology and data, ultimately the economics 101 could be solved, which is you would be able to catch the demand where it is by providing the right supply. And from there on, the ideas of the right product market fit, how should you be placing the product, at what price products should be provided in the market came about.
How do you sort of describe Igloo's core value proposition, and how is it sort of how does it stand apart from in today's insurtech landscape?
Yeah, so Igloo's value proposition, as you can imagine, has in a way recalibrated, remodeled itself to the changing times. One thing that all along has in a way stayed consistent is our tech DNA. And by tech also, because insurance is a fairly legacy industry. The first insurance contract was probably issued somewhere in Europe 300-400 years back, right? So it's quite an old industry. And when you are part of an industry that carries a lot of legacy, the chances of digital and technology being used for the most flimsiest of use cases is quite out there, right? So I think the idea at Igloo was always to be at the forefront of technology. Couple of pivotal points. If you remember, before AI became what it was the AlphaGo moment, right? Where machine beat man. And post that, Igloo became one of the very few companies in Southeast Asia and amongst the very few across the world that started using the neural networks on TensorFlow that were available in the Google tech stack, right? Fast forward, I would say 5 years, when the generative AI moment started, by that time, we were already doing like 100 to 200 million policies a year. And usage of these kind of frontier technologies became not so much a matter of choice, but a matter of existence for Igloo, right? Because as of today, to give you a perspective, we provide the infrastructure to facilitate the distribution of close to 90 million policies a month. We have facilitated the distribution of close to 2 billion policies across the region. Just last year, we did close to 800 million policies in a year. So you can imagine that we would be there among some of the top companies, if not in the world, at least in Southeast Asia, in terms of the load that our systems are taking. So the idea has always been, how do you use technology to democratize insurance? Because technology alone can help you in a way reaching out to a wide segment of the population. But then how do you use data, the data that sits with us, data that sits with our partners? How do you utilize that data in a way to do a better job of product market fit? Something which this industry has in a way that has inhibited the growth of this industry. Remember, insurance is a very push-based industry. It's known for coming up with a very cookie-cutter approach to problem solving. It's known for being, in spite of it being in the financial services domain, there is no such thing as personalization, right? And I think that is where the ingestion of this billions of data points enables us to come up with products that are in a way catered to the needs of the target segments that we serve, right? So, and as simple as that, that's probably that's what even defines a mission statement as of today, that the vision of providing insurance for all.
And Southeast Asia remains your focus, and you've been sort of expanding around Southeast Asia. Is that your primary motivation right now?
In the past, in the present, yes. But I'm a firm believer in technology cannot be stopped by any boundaries or any borders. And hence, we are definitely, given that we are an infrastructure player, right? I mean, we are in a way providing our partners, be it insurance companies, be it banks, be it consumer internet firms, or e-wallets, we're providing them with the necessary infrastructure that's required to, in a way, encapsulate the entire insurance value chain, right? For long, you would have heard of insurance being sold digitally. the selling of insurance digitally is just one part of the puzzle. I think where the trust breaks is understanding of the policies. Where the trust breaks is claims management. So these are the areas where we are focusing massively, where we have focused in the past. And now with the usage of AI, the focus has just gone up to a different order of magnitude.
How do you sort of work with insurers in sort of, you said personalization isn't something that insurers do very well.
Yeah.
How do you work? I mean, how do you work with insurers to sort of personalize some of these policies or come up with new products?
Yeah, I'll give you a few use cases, right? So first things first, as you can imagine, that insurance is a highly regulated industry. You need somebody with the right kind of license to be able to underwrite policies, right? So we respect that. We work with global, regional, local insurers. But when we go to these insurers, the idea is never to just pick a product that's on the shelf and just solve for distribution, right? That's also a business model that a lot of insurtechs in Southeast Asia have done over a period of time. But remember, you're talking about an industry that grows barely above or at par with inflation, right? So you're not in a way creating a market. You're not in a way bringing products and services to the, as I mentioned, the uninsured or the underinsured segment. What we do is we will probably work with insurers on two fronts. The first front is we would in a way work with a distribution platform. More often that these distribution platforms benefit from the network effects. And we try to find out the kind of inherent or I would say explicit risks that the stakeholders on these platforms would probably be taking, right? Think of, I'll give you an example, like think of e-wallets, think of e-commerce. When you're buying products on e-commerce platforms, because it's such a fragmented place now, you need some sort of a purchase protection, right? When you're using any of the digital platforms, given the massive shift to digital medium that has happened for retail consumers as well as for SMEs, in a hybrid setup, there are always issues with respect to data privacy. There are issues with respect to frauds and scams, right? So coming up with a product that in a way addresses just that. The other one, which I think I'm personally quite passionate about, is climate change has hit Southeast Asia quite bad, right? Temperatures are rising, as you can see this summer. If you travel around Southeast Asia, I think this is probably one of the hottest summers we've had. And at the same time, when the rains and all start, flooding has become a fairly regular affair. Now, what happens then? The small-scale farmers, the fishermen that has to go up to the sea, the MSMEs, the sari stores in Philippines, the warungs in Indonesia, they'll lose out on their daily incomes. If the rain isn't adequate, or if it rains a lot more, farmers lose out on whatever working capital loans they might have taken from microfinancial institutions. That is where we come in with weather index insurance product. A product that was conceptualized in-house, it's built in-house, because in order to bring this product to the market, it requires massive amount of data capturing abilities and data management abilities. And I'm talking about satellite data, right? And as you can imagine, weather patterns change earlier it was like climate changes every 35 years. I think that has gone down now massively. So being able to crunch that kind of data and able to come up with the risk assessment of the Mekong River Delta region in Vietnam, or urban or semi-urban area in Manila and around, or in Jakarta, is something that we are able to do. So these are the areas. What we are effectively doing is product conceptualization, being able to get an understanding of the risk associated with the product, and then sitting with our insurance partners about the product. So you can call this more of a product consulting approach. And in parallel, you need, I would say, the rails to, in a way, deliver these products to the consumers. The consumers could be people like you and I, or could be MSMEs and SMEs. That rail is also developed simultaneously for our partners. So that's pretty much how I would say we work on both ends of the spectrum, for the consumers as well as for our insurance partners.
Quite interesting. You mentioned parametric products, and we've seen Igloo do a couple of parametric products across Southeast Asia. How does that, from a technology provider, infrastructure provider, and embedded solutions provider, when you do a parametric product, as you said, you've done the product conceptualization and development in-house, and the distribution as well. How does that fit into the sort of Igloo model? Why do you think Igloo is in the right place to do that sort of both developing that product and distributing that product? What is that advantage that you have?
I think the inherent advantage, which I don't think is how should I put it? It's not by chance, it's by design. Because from a very early days, we were quite obsessed with how we were managing data. And even if you see now, right, you're hearing a lot about how people, and you would be seeing on LinkedIn, right? Almost everybody has become an AI expert and coming up with this and that chatbot. But the moment the discussion moves to the enterprise side of things, there's a lot of silence, right? Because one of the biggest things people have, in a way, failed to get a hold of is AI is as good as the data that's being provided to it. By data, I mean enterprise data, which is nothing but a combination of transactional data, as I call it, and subject matter data, which is static in nature, right? So subject matter data is your SOPs, your strategies, and et cetera, et cetera. I think at Igloo, we have codified these two in our organizational DNA ever since we were born, right? And by having the right data pipe set up, we are then able to take advantage of it to effectively be able to create weather index and similar kind of products that require data management in terms of volume and also at a fairly high frequency. And this is where I would say, this is just one example, by the way, where we have shown the superiority of not just the tech stack that's being, remember, everybody has access to the best tech stack available, but then you should be able to harness its power as well, right? Otherwise it can run amok and just blow up. So I think we have been very, very good at that part, relatively good at that part compared to most of the players, and by players I mean most of the startups in this part of the world. That's how I see it, and that's why we see a lot of partners wanting to work with us, the leading e-wallets, leading e-commerce players, banks now, as they are moving from an offline to hybrid to a fully digital model, wanting to be able to use these kind of capabilities that we have, which is not just limited to, let's say, a weather index, but things like being able to offer simple stuff. One of the biggest problems in insurance, which I'm pretty sure you would have faced, I still face, is understanding policy documents. How do you make sense of a policy document? In the sense, nobody wants to gain education by reading policy document. Let's be very honest. That's a very boring part of the equation. Everybody wants to know what it covers, what it does not cover. Being able to answer such simple questions. So that's part of what we call as the insurance knowledge base. Then when you're doing claims management, how do you ensure that you won't believe more than 2/3 of the claims that are filed get rejected, not because of, let's say, the claims, there was something wrong with what the person was filing, but just because of sheer incompleteness of the evidence, because there's nobody to guide them there. This is where AI helps, right? This is where AI helps in the form that the moment somebody has submitted the claim documents, within seconds or microseconds, it will tell, okay, what you've submitted seems to be right or wrong. So the person gets a lot of confidence, right? Otherwise, the moment you've submitted claims, a couple of days pass by, you don't get any update, and then all of a sudden you will receive an email saying, this is right, this is wrong. And by that time, you've lost track of things. So these are I would say, these were we're doing the plumbing right now, and in a way trying to, wherever there were some leaky walls, we're trying to cover them up.
It's quite an interesting way to put it. So you've had, Igloo's been around for a few years. You've been through few rounds of fundraising. You've had some expansion. Can you tell us what's next in terms of expansion for Igloo? What's your goal, both from be it fundraising, be it partnerships, market expansion or M&A?
For this year, I think we have like three very important pillars of let's say our operating model. One, of course, is international expansion, as you mentioned, going beyond Southeast, and I call it international expansion as well as category expansion. So international expansion is fairly easy. I mean, moving to other countries, given how borderless our technology is. The other part is category expansion, where we want to pick up certain product categories in the insurance space and go deep into it from a distribution standpoint, from a servicing standpoint. So categories being health, categories being life, right? And trying to solve for the low-hanging fruits that are out there, at least for this year. So that's on the international. That's on the let's call it the expansion part of the story. The second part, which we have spoken about a bit, is on the investments in AI. It's on a, it's like a hockey stick sort of a growth that the hyperscalers are showing you. New models, new skills around these models, new infrastructure is coming out almost on a daily basis. How do we use that to, in a way, become genuinely AI native? Now, you would have heard this phrase a lot, right? AI native. But what does it really mean? In the simplest of forms, if you ask me what does AI native mean, is, of course, it means that a large part of your organization's work is being done by AI. But that aside, the way I see it is, when employees in an organization start using AI for both individual and collective productivity gains, but most importantly, AI becomes a part of your organization in terms of building and delivering things. So I think now we are in the second phase where we are letting AI build and deliver things. So what do I mean? Now we are having AI write the code base. We are having AI deploy the code base, create UI, UX, do the right integration, and thereby saving, to give you an idea, for certain projects where it's been completely managed by an AI squad, we are seeing almost 78% sort of an efficiency gain. That's massive, right? And these are for tasks that we have done over a period of 8 years. We can train the AIs in this. And of course, there is a certain degree of human in the loop required, given the handoffs that are happening. So you need to have the right level of authentication and all. So that's what we are focused on the second side, which is the investments in AI. Third part, of course, is on the M&A, as you mentioned. So we are definitely looking for like-minded players, not just in Southeast Asia, but across the world, which enables us to not just get entry into, which in a way serves the first two things I spoke about. One is market expansion or category expansion, and gives us a leg up on adding up on tech capabilities, right? Because of course you can build everything. Of course you can expand organically to across the world. But there comes a time when it's a question between build versus buy, right? And at times buying it in a way gives you a better return on your investments.
So your expansion would be built on potential M&A across technology, new markets, and new product categories.
Exactly. Yeah.
And in terms of, you said markets, are there specific markets that interest you more than the others?
So we generally look at it from a few lenses. I would say markets that have, in a way, facing a transitionary movement in terms of a good segment of the population moving from offline to online. And they have the visible platforms for it, right? So if they have an e-commerce platform, they have digital banks, e-wallets, and also the right regulations around it, right? Generally, when you don't have the right regulations, or rather, I shouldn't say right regulations, as in regulations keeping up with this digital transformation, you're in for a bad surprise, right? Because you might go in, regulations change. So we want some stability on the regulatory side of things. We need to have a good idea of how good the addressable market is, and do we have the you could say you have the platforms to facilitate that kind of models. And of course, if the markets show similar kind of behavior to Southeast Asia, a lot more easier, right? Because then whatever you've done here, you can in a way transition it to those parts of the world.
It's not necessarily doesn't have to be in Asia. It could be anywhere.
Anyway, yeah, it could be in Latin America for all you know, right? I mean, because they share a lot of, I would say, in terms of economic parameters, in terms of social aspects, are sometimes very similar to Southeast Asia, right? So in a way, yeah.
And I mean, the insurtechs. There's quite a lot of companies that call themselves insurtechs, and there's different. They all do very different things, right?
Yep.
I mean, the whole. So, is there a specific when you look at acquisitions or when you look at expansion? Are there very specific technologies or products that interest you? I mean, that defines Igloo's expansion plans.
Yeah, I mean, if you're looking at a possible target from a technology lens, right? It definitely needs to be. It definitely needs to have capabilities that we don't have today, right? So, as you know, insurance, in a way, it's a massive industry and it's very diverse, right? Different kind of products require different kind of handling, and no matter today we are doing 400 products under the GI umbrella. Everything under PNC, everything under ANH. There are certain use cases we might not be doing because we have probably not been exposed to, or it might not be a priority in this part of the world. So if we have a possible target that fills in these gaps, that's what we generally go for. That's one. Second is again, I mean, as you mentioned, that the term insurtech is quite broad based, right?
Yeah.
Hence, we need a player where the culture and the tech stack in a way is honest to our culture and tech stack. Because if your tech stack is a couple of generations behind, the integration and all could be a very, very tricky affair. So yeah, I think these for us are, I mean, other than the usual aspects of business should be sustainable, etc. I mean, which go hand in hand with any M&A, but these are super critical for us.
And Igloo is very focused on the sort of B2C, business to customer sort of end of things.
Yeah. That's the right way to put it, because I think that's we have. I would say it's more mostly the products that we do are on the retail side of things, but yes, we also do products on the commercial side of things, and you will see us doing it more under the health umbrella for employee benefits and so on and so forth. Because look, there are 3 product verticals from my understanding, which are fairly evergreen in Southeast Asia. Life, of course. I mean, this is that part of the world where, and that's a sign of an emerging market when life premiums are way higher than GI premiums, right? Because a lot of people are buying unit-linked products, et cetera, right? So I think having a play in the life side of things, and then health. I mean, medical inflation in some of the countries is like through the roof, right? For reasons that are beyond the scope of this discussion, but we all know why it's like that. I think there's a play there. And third, of course, is motor. Motor for a couple of fronts. Motor is a big vertical under the GI space, but it's a red ocean because it's being played on price without any kind of. It's a very commoditized product, so there's no and. I mean, it's strategy sort of 101, right? If it's a red ocean, if it's a big industry, you have to break through the clutter. Cannot be a commoditized product. You cannot be a loss leader. You have to look for product differentiation. So I think that's another area that you will probably see us delivering on.
And Igloo remains a tech player. Are there plans to get sort of an underwriting to move to the underwriting side of things? Get an underwriting license. Is that something that you'd consider?
Today we do have an offshore insurance and reinsurance license, but that's offshore in nature, and it comes with its own pros and cons. But I think as of the moment, I mean, look, you can be whatever you want. right? Nobody's stopping you. But I think from a focus standpoint, our focus would be on the three things I mentioned.
Okay.
Along the way, a couple of years, 3 years down the line, when we feel confident enough that we will do justice to our insurance license, we might probably go down that path, but not for the short to mid-term.
Absolutely. Makes sense. I just want to have one last question. Basically, you mentioned AI quite a bit and talked about being AI native. How is AI reshaping Igloo's business? How is it, when you started off, there wasn't agentic and generative AI. How is things transformed in the last 4 years, 3-4 years, when we've seen AI become such a mainstream technology?
Yeah, so the first things first was mapping out everything that we do in the organization and then seeing in which areas by the usage of AI, we become fast, we become consistent, and we become more accurate, right? And we identified certain departments or certain processes that were out there, right? So on the first ones, of course, that got impacted were on the operation side of things. I mean, when you're doing 90 odd million policies a month, you can imagine the load that comes to the system because in terms of customer service and claims management, right? And that is where we were able to automate a lot. So much so that for certain high frequency microinsurance products, there is no human in the loop and almost everything is managed by AI 24/7, 365. The next one, of course, was on the engineering side of things. I mean, when you are across 6 markets and today our product density is, for some of our partners, is around 7 to 8 products, right? You can imagine bringing a product with a big partner, no matter how good both sides are, requires a couple of sprints or 3 sprints, right? And if you look at Igloo over the last 3 years, we have barely grown our overall employee strength. If anything, it has actually gone down. So that in a way is a great validation of how AI has provided that leverage to us, right? And this is where, in a way, the engineering teams, the product teams, the design teams, and the data teams have helped themselves by the use of the AI tools that are out there, right from foundation models all the way up to agentic AI, and how they have been able to drive very high productivity. So I think that's then most importantly the customers, right? So I've already given you an idea of how AI in claims management has helped our operations team.
Yeah.
AI, the same thing, helps our customers in terms of claims management, and also in areas where customers in a way are directly exposed to Igloo. They are today utilizing AI with great benefits in terms of finding the right product, adding the right feature. Because remember what I told you, customers don't understand what insurance product or what additional features they should be buying when they are taking certain risks, right? So across these 3 areas, I would say is where we have seen maximum impact of AI. So much so that I think we are internally developing a sort of an operating system, not just for ourselves, but for insurance companies as well. And when you think of an operating system, it comes with its root kernel, and then you've got apps on top of it. So it's exactly built in that ways, and it's now being used by us. 3 months, 6 months down the line, you might see insurance companies. Some of them are already using some of our AI functionalities to add a bit of an AI edge to their operations, and you would see that more often now.
Raunak, that's all the questions that I have for you today.
Sounds good.
It's been a fantastic conversation. Really
I
enjoyed
hope I was able to answer your questions.
Thank you very much. Really
Thanks a
enjoyed
lot.
this.
Thanks a lot.
That's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn. Make sure you're subscribed to our daily and weekly newsletters, delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.